Hi everyone, and welcome to, well, for what is for David and I, our third webinar of the day, where we're going to be looking at the US session, day trading in the US session. We've got some indices up, we've got some commodities up as well. It's all quietened down a little bit since, over the last couple of hours, hasn't it, David? Is it back into its little slither, as it were? But there's a lot going on in the background, so lots to share with you in this webinar, and we'll just see what what the market gives to us this afternoon. But before we do, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And here we are, David and myself. He's actually sitting about 2 desks away from me, and as always, we'll be looking at the markets through the prism of volume price analysis with our quantum trading tools. I know most of you who come along have already either bought the book or have read the book or have bought some of our indicators, and I think some of you are even on the Forex program. But just in case you've been living under a rock for the last, is it 4 years, 5 years? You may not have come across volume price analysis. It's all explained in the book that is on Amazon. I have to share with you because this is so funny. I'm sorry. Usually I rattle through the I rattle through the presentation, but this tickled me. I had a message from someone on Facebook, a very sweet message saying that he were absolutely delighted with this book, and they had explained everything about the Wyckoff method, because volume price analysis is based on the principles first outlined by Richard Wyckoff. But he also said he'd never come across a female trader who had ever explained it to him in such a clear way. I took that as a very nice compliment. Anyway, but it did tickle me. So there we are. This is on volume price analysis, and what we've done subsequent to the publication of that book is there is a follow-up book, there is a complementary book with lots and lots of worked examples of the methodology, and there are over 200 worked examples. Of those ones that have been bundled with the book, it covers stocks, indices and commodities, because volume price analysis, what it really does ultimately, it basically gives you an insight as to what the price is going to do next. We look at what the price has done, where we are at the moment, but really the question we all want answering is, what is it going to do next? And while it is while the price is moving, is it a valid move, or is it in fact a trap move and it's an anomaly? And it's just a very simple precedent, and it's really to seek validation of the price action, and that's what volume does for you. Right, here we are. What we've done in tandem, we also have developed a set of tools and indicators for day trading, the futures and the cash markets. And those of you who have the tools will know that they're both time-based and non-time-based, essentially Tick and Renko. And you can find details of the tools that we're using in this particular session, which is for the NinjaTrader platform, at quantumtrading.com. The full package of the tools come to $749, but you can actually buy them individually. You can buy one. There are bundles of the tools, and if you buy 1 or 2 and then you want to upgrade, you will always be credited. And as always, whatever you buy from us, it is covered by a 7-day money back guarantee. And what David and I are always quite astonished at is that we have traders who buy maybe 1 or 2, they actually refund. They say, oh well, I don't really think it's for us, and we say fine, that's not a problem. And lo and behold, maybe a month later, a few weeks later, even a year later, they come back and they say, do you know what, actually thinking about it, can we buy them again? And we say, yeah, why not? We'd be absolutely, we don't mind whether you buy them the first time, give them back, and maybe come back and buy them in subsequent months or even years, as I said. And included in the price, all the upgrades to the tools and upgrades to the platform as well. You can discover more about the tools, the individual pricing, and also the tools for the other platforms at quantumtrading.com. And finally, We do talk about the commodities here, and we don't talk about stocks, but if you want stock analysis, particularly want to know more about volume price analysis and how to interpret it for stocks, although I have to say the methodology is applicable across all markets, even cryptocurrencies, and there's a book about trading cryptocurrencies on Amazon as well. If you head over to my site at annacooling.com, all the analysis will always have a VPA lesson that you can then take, learn from, look at the pattern, look at what's look at what the analysis is saying, and apply it to other markets. So what the site does is, the main blog is stocks and commodities. Sometimes you do indices, and then the individual Facebook pages that are on there are more specific. There's a commodities one, there's a forex one, and there's also one for quantum trading. Right, as always, David is with me, but I'm actually going to pass over to David first and give him a chance to say something while I get my charts in order.
Hi everyone, and a very warm welcome. Good to have you along with us. I have to say it's absolutely a wonderful day here. Oh, you're changing screens as well. Okay, hold on. I'm just going to switch my screen over as well. There we go. Do two things at once. So good to have you here, and I hope it's sun is shining where you are, both in terms of trading and also in terms of the weather. If you have any questions, if this is your first time coming along, then please just drop them in the chat box. Happy to answer them there, or we'll answer longer questions, more detailed questions on air for you. Just scanning my eye over. Basically, I've got the... Yeah, sure. Just if you do have any questions, just drop the email. Either helpdesk@Quantum Trading. If it's questions about the indicators, if you want to get in touch with us direct, it's david@quantumtrading.com or Anna at which email address are you using? Anna@annacooling.com. So any of those will find us. This is the YM, the Dow, the E-mini future for the Dow. We're in the September contract on this one. I've got the time frames. I've got the 15-second up here. It's pretty quick. 2 minute, 5 minute, 10 minute, 15 minute, and over on the right hand side I've got the daily. And as you can see, I'll just pull that open. There we are. This is where we're trading at the moment. So sadly not a day for strong trends at the moment. There's a lot of background noise. There's possibly Trump, there's possibly China, there's all sorts of bits and pieces going on in the background. So it's no surprise to see the market trading in a relatively tight range, and that applies pretty much to all three indices, which I've got over here somewhere. There we go. That's it. There we are. Just get that out of the way. This is on 5 minute on the top line and daily on the bottom line. I've got the YM over here. I've got the NQ in the middle, and I've got the ES over on the right hand side. And in fact, of all of them, actually the NQ is showing a little bit more activity than the other pair. That's just the NQ on the daily. So it's a question of being patient, as always. Let's go back onto the multiple time frames again. I've got half an eye on oil as well. Where are we? Got 5 minutes to go on that. In fact, just pop over there in a moment. This pretty much epitomizes it. I know you've seen this many times before, and indeed this sessions, it's certainly the last few sessions we've seen this follow through into congestion. Got the volume point of control pretty much across all the time frames in evidence. In fact, other than the daily, well, that's where we're trading around. So it's just a question of waiting and being patient for a strong move away from that particular region on the price chart. Just go back onto commodities for a moment, just see where we are. Oh, we're waiting for something to develop there. There we go. Top line is oil. August contract, got the 15, the 30, and the daily on the top line. Down on the bottom line, I've got gold, 15, 30, and daily. Again, we've written about these, just move that out of the way, written about these pretty regularly over the last 2 or 3 weeks. Delighted to see gold has had some really strong moves, very much dollar driven. But what was interesting yesterday was this you possibly can't see it, but there's a wick that goes all the way up past 1440. Closed down on the day, but very strong, deep, well-developed wick to the upper body of the candle. Very good volume underneath that. So it's no surprise to see the sell-off today. That said, a lot of this will now depend on what happens in terms of the dollar, whether we see a recovery and further gains for gold, which is what we think is going to develop in the short to medium term. Very low volume up here on the volume point of control, so all things being equal, it should drive through the fairly relatively easily, provided we get some injection of momentum through the perspective of dollar. Obviously, that's been heavily influenced by who was it? Bullard yesterday? I can't remember now. Yeah, I think it was. Both of them. So various comments which were reason for the strong move in the dollar yesterday. So I'm just flicking my eyes around all over the shop. So that's gold. This is oil up on the top line. Just waiting for the oil inventories, which are due out in literally 2 minutes' time. So that will create some volatility. And if we get a decent draw, then that should help propel this a little bit higher and away from the volume point of control. Alternatively, if we get a build, that'll drive it lower. So just keep an eye on that. Did you want me to pass back to you?
No, after the inventories.
Okay, I'll move back after the inventories. Let's head back onto the indices. Just go back to the multiples. There we are. I've got the tick chart set up as well. Decent move higher, but look at the volume. This is 15 second falling away as the rally was coming in. Now we've got a ton of volume coming in under this candle. Volatility trigger. Expect the market to reverse inside of that candle. Loads of volume under here, support under here, trying to break away from the volume point of control. But that is on 15 second. Over here on the 2 minute, a little bit slower paced. That looks okay. Decent up candle, decent volume, in agreement, but we're back around the volume point of control, so we're going to see congestion building from there. It's not going to go very far at the moment unless we see some serious volume driving this market one way or the other. Usual volatile open on, there we are up on the 10 minute. Whipsawing around, it's what it does virtually every single day. And just always reinforces to me the fact that trading these markets is more straightforward when you're trading on Globex alone rather than through the physical market, certainly at the open. Once it's everything's calmed down, then yes, you get the trends develop. Boy, oh boy, you have to be patient. This is just a characteristic of these markets and has been for quite some time now. 2-bar reversal on 10. More volatility coming in. Just keep an eye on the oil inventory.
Yeah.
Okay.
It's supposed to come out, actually. Oh, yeah. Not a huge draw.
No? Okay. I think it was about -2 or something, wasn't it, the forecast?
The forecast was -280.2873,
okay.
And it's coming up. Wait a minute, hold on.
I was just checking that out. Okay, got decent volatility on here. Nice volume. Nice price move going on now.
No, huge draw.
A huge draw.
Well, sorry. Right, can I just say something? Do you mind if I just say something?
No, I'm just going to pass back to Anna. Hold on a minute. I'll leave this screen up.
Right. News and what's actually been said or not been said, or incorrect reporting of news. In fact, it was something I was going to refer to later on in the webinar, and that is first of all, we had the stock market, or the futures went up because of comments that were interpreted by the media from the Treasury Secretary to say that there was the agreement between China and the US was 90% agreed, and it was the use of the word is, and in fact there's been a correction from, I think, CNBC, the original originator of the news, that it 90% was agreed. So in fact, there isn't an agreement. And there's all sorts of, if you go on to Forex Live, there's all sorts of comments saying that the guys at Forex Live have made, didn't listen to the news properly, don't, etc., etc. That, be that as it may. it's just a perfect example of how these markets are just being driven one way or another by not only what is actually being said, but an interpretation of what is being said, but sometimes an erroneous interpretation, and it's very easily done. So, you know, I feel for the guys at Forex Lab, and I feel for anybody who has got to, you know, deliver this news in real time and as fast as possible. So when I was looking at the draw, this is what the draw says. It says minus 12,788 against minus 2,873. So that is a big, less of a draw, David. I always get.
Sorry, what is it?
Well, these numbers, I'm going to have to cross-check them with somewhere else. Let's have a look in Forex Factory. Right. I've got minus 12.8 million against minus 2.7 million. It's a bigger draw. It's a bigger draw. Yes. And I raised my hand. I looked at the figures I looked at the numbers on Forex Live, and I'm sure other traders do it as well. And I hadn't actually seen all. That's the way our brain works. We kind of take in part of the information and then we fill in the blanks, as it were. And it's something we're all guilty of. So it's a much bigger draw than was anticipated. Right. Also, to get back to what is being said, not being said, etc., etc., go back to what Mr. Trump has said. And if you have talking Forex, there's a really nice, neat summary on there. He talks about China and he talks about the Fed and whether, you know, he says he has the right to fire the Fed chair, but he has never suggested it. Well, I don't, you know, whether he does or he doesn't. I think if he ever, you know, treated the Fed chair as a contestant in his Apprentice show, well, I think the markets might take a view on that. So that's all I wanted to say about that, David. Is that okay if I move back to you? So what has oil actually done on that? Because it was moving up to, I think, $60 anyway, wasn't it? I'll pass over to you.
Thanks, darling. It certainly injected a bit of momentum in there, pushing up towards 60. And this was the level that I think we highlighted on one of the analysis we did at any rate. If we got through here, there's volume all the way up. We've got a low volume node up at 61, relatively low anyway. We've got some very strong resistance in here and obviously got the volume point of control up here. So, you know, for the market to propel through here, it's got to see some decent volume build. I always have this closed off in these sessions because I have a lot of data coming in anyway. So this only closes, the volume will only fill once the candle is closed off, but you can run it live and have the volume coming in real time. You can see how quick that's building. What's interesting though is, as always, this has now got a volatility attached to it. If you're in a strong position, and in this example where you've seen the market come in, maybe you're bullish on oil anyway, as we've been, and you see it as an opportunity to jump in the market, maybe ahead of the news, maybe you trade through the news, up to you. Once this volatility is triggered, it's triggered in real time, and this is now a candle that's moved outside the average true range. What that's telling you is two things. First of all, the big operators are involved in this move because it's moved rapidly. They want to draw you in. And secondly, if you've got some decent profit in there, then our suggestion, I'll put it no more strongly than that, is excuse me, that you close out, take that off the table. If you're trading larger size, if you're trading multiple contracts, you can scale out. If you're trading just one contract, then, you know, I would close out, particularly in an up move like this. Very volatile, nice strong move. It's gone from 21 up to 83, so we've got roughly 60 cents on the barrel. You know, great profit in there. Close out. You can always jump back in again. The cost of trading now is peanuts. It truly is peanuts to get in and out of these positions. So it's a question now of just anticipating what is likely to happen next. If it reverses inside the spread of that candle, great, you'll be happy. You wait, be patient. Ultimately, the bullish sentiment may well follow through, but in the interim, you don't particularly want to sit through a congestion phase. So that is more likely to follow. If it doesn't and it spikes higher on the next candle up, fine, you just jump back in again. It's cleared that volatility and you're back to normal service resumed. only our suggestion. It's just what I do every single time, virtually without exception. I think I said this morning, 99 times out of 100, that's what I would do. And that's absolutely hand on heart what I would do. Because I don't particularly want to sit through what I anticipate next, which is congestion. Nobody does. I don't enjoy it, particularly if I've got a strong position, and I'd just rather close out and jump back in again. Simple as that. So that's the market reaction on the oil inventories. Let's just go back on to see what's going on here. Has got anything developing or not? It's all very weak and laboured and lackluster. If you're going to trade in and out of here, you've got to be quick. You know, it's up onto 2, you know, you get this little rally, you think, okay, maybe I'll jump in, and the weakness comes in with a spike, and then, you know, strong volume under here. Yeah, you've got rising volume, but this last one, you know, it looks very weak. More weakness, hit some resistance here. Okay, you've got some points you could take in there, but you've got to be quick, and if you're going to do it, you've got to be down on the 15-second, 30-second, and possibly up to the minute, something like that, which doesn't suit everybody. Some people enjoy it, some traders don't, and they hate it. It's just anathema to them. There's no right or wrong way in trading. You've just got to find out what works for you. You've got the same thing building on 10 here. This is the wick to the upper body. Trading around this range. Not really going anywhere. Tick charts are pretty sluggish as well. I was hopping around while Anna was talking. Sorry about that. I found it distracting. Sorry. This is on the ES of, this is not the YM, this is the ES on September. And just to get a sense of momentum in the market, you know, are the tick charts moving or are they sluggish? And they're pretty sluggish at the moment. This red is just telling you loud and clear. You can see it. The activity is dying away. There's no participation. It's very lackluster. Had a burst of activity on that candle, weakness coming in, trying to rally on decent volume, market falls back, and we're running at very slow ticks. This is 987 or 918 actual. This is on the tick speedometer, which converts your time-based chart. So your 1 minute here is converted into the optimal tick setting, which is constantly changing throughout the session. So this is the 1 minute. This is the 3 minute equivalent. This is 1597 or 1547, 1557. This is constantly changing. This is the actual. This is the closest Fibonacci because this changes less frequently. It means you don't have to change the charts quite so often. And down onto the 5 minute. This is running at 2584 or 2260 odd, whichever you prefer. Rule of thumb, I use this number when I'm trading on both exchanges, running the electronic and the physical. And I use this number when I'm trading just purely on Globex on its own. Just what happens to suit me. You may use this one for both. It's entirely up to you. And the reason we developed it was because most traders guess the tick setting. They'll just put any old number in that maybe a friend's told them, maybe in a forum somebody said, oh, well, I've used this, so they use it. Haven't really got a clue why they do it, but it's just, you know, stuff that's handed out from one to another trader. What this does, it actually delivers the optimal tick settings for you. That's why we developed it, so you're actually trading at the right speed of the market. If the market's fast moving, you want to be trading at the right tick speed. If it's slow moving, same principle applies. You're trading the right tick chart for that particular instrument in that particular environment part of the session, because it changes constantly. The ES is the most heavily traded, and these tick charts should be running in tens of thousands, not in these 2 and 3 digit numbers. This one here on 5 minute, this should be, you know, in a really fast moving market, this will go up to 15, 20,000 ticks over 5 minutes, something like that. This will be, you know, maybe 8 to 10,000. This 1 minute will be several thousand. You can see how sluggish this is, and that's what it also does. It highlights that for you. It tells you this is not an optimal time to be trading at the moment. You've got to wait for reversion back to either orange or green, one or the other. Orange is the norm, if you will. That's what the market, you know, where it's even paced price action and decent tick activity. And green is when you get the spikes. And the other reason we developed it was because we wanted to be able to apply volume price analysis, but also the advantage of using tick charts. So you have VPA that you can do over here in terms of the tick speedometer, just conventional, linear volume price relationship analysis, and then over on the right hand side you've got the advantage of trading on a tick chart. Why do traders trade on tick charts? Because you see raw momentum. That's what you see on the tick chart. You don't see that on a time-based chart. As the market speeds up and slows down, you will see that on a tick chart because it's independent of time. This is actually down at 987 now. It's very sluggish. Just change that down. Or most of the indicators work on this in exactly the same way. You can see I've got the trend monitor here running. That's fine. It's just and it's the principles are identical. You're using multiple charts in exactly the same way as you would with a time-based chart. You're just using them as tick charts, but the principle is you can have 3, you can have more if you wish. Generally use 3. And the trend monitor, for example, you can see down here you've got the transition into bullish, the transition to bullish, the transition to bullish on your slowest one, which has now increased slightly. We're now on 4181. Just change that up. Okay, starting to see that develop there as well, even on the 4181 tick chart. In addition to that, we've got the accumulation distribution running on here, so you can see where these levels are. We've got a decent level of resistance here. If we get through, where are we, 2930 odd, then we've got some clear water going on up into 36, 37, 38 on the ES, which is would be a nice bag of points if it develops. You can see down here we've got a decent level here and a strong platform here building as well. And down onto this one, we've got this region here, which is very strong indeed. So we want to see a clearance through there. Then we're looking at this level here. Then we're on up to this chart here. And once we clear this region, then we've got a nice base in place for a decent move higher. This has now increased again. In fact, this has gone up to 6765. So the participation is increasing. Still got those levels in place though. Okay, now we're changing. Now we've updated. Minor resistance here now on this particular chart. These levels are relatively minor. These have been tested and held once. These have been tested and held twice. This is a stronger level. This has been tested and held 3 times. A little bit like conkers. Apologies for those of you who not in the UK, probably don't understand that, but we have conkers in the autumn from horse chestnut trees, and basically there are 1 or 2 or 3 or whatever, and that number increases the more that you beat the competition. If you've got a 10er and you beat someone who's got a 15, you become a 25, and so on and so forth. Similar sort of analogy. Very sluggish down here on the 1 minute. Pop that up full size. There we go. Nice solid platform, a ceiling in here, and if that's taken out, then got clear water. I haven't got the VPOC on that. Just move that out the way. Get out the way. Get out the way. There we go. Pop that up there. Okay. And this is what you're looking for. If you're looking for trading these markets, you've got to set levels. You've got to decide if you're comfortable with these levels. If you're trading in here now, you're looking at this and this as your corridor of price action. And in terms of what's like to happen next, if we get a break to the upside, once it's cleared that, the question is how far do you want to be clear away from that before you jump into this and try and grab some points out of it. But notice how the participation here is bright red. It's just sluggish at the moment. We're not even in orange, let alone in green. So there's absolutely nothing going on. It's very, very slow paced. Let's just go back onto the time and have a quick look at the YM. Probably doing the same sort of thing. Exactly the same sort of thing. Crisscrossing around the value area or the point of control up here. No bias to one side or the other right now. Just have to wait and be patient. And how many times I said that in these sessions? It is about patience. Just quickly go over and see where oil is. See what's happened after that volatility candle that was on there. Where are we? There we go. There we go. Okay. Pick any one of these because we've got volatility on all of them. So there we go. We've got 15. Well, we're going to trade inside that candle anyway because the candle came off the highs, which happens. Sometimes it closes up full body, no wicks. Other times it'll close down. And it closes down, then clearly the next candle is going to be inside there by default anyway. But that's what we're expecting to see. And look at the volume. An absolute ton and a half of volume came in on that news. And we close with this big wick to the upper body. So there's a huge amount of selling going on in there. People profit taking, big move, profit taking, big operator selling, absolutely no problem at all. Now, what would you rather be doing? Would you rather be counting the money in the bank or sitting here stressing about whether this is going to break to the upside and take you higher up through 60? That was a rhetorical question, by the way. We've got volatility on 30, and again, this one didn't follow through quite so much. Still some congestion there within the candle. This is what I mean. You get the volatility triggered in real time. It's moved outside the average true range. We know why, and it's there for all to see. And you have to make a decision based on that trigger. Let's have a look at gold. Okay. Again, another market that's trading around a value area, point of control, no bias one way or the other. And again, it's about setting levels. Are we going to trade this to the upside if we break through 14.16, 14.17 per ounce? Got a decent ceiling in there, not that strong though. It's only 2 levels in a cluster. Got a very strong platform in underneath, 14.07. Which has been tested here, did actually break through, was returned to the volume point of control. And if we break to the upside, we've got very low volume here. If we break to the downside, equally a low volume here. So it's just a question of waiting, be patient, wait for what develops, see how the volume develops as the move breaks away to confirm any move. And of course, for oil, there's many other factors other than just the technical picture, which may well come to play in that market. Trend line's rising nicely away from the fulcrum, the 0 point here on it. Trend monitor's nice and bullish. Looking for more momentum to the upside. Just see what's going on in the dollar. It's done very little today, to be honest, I don't think. Let's just have a quick look. Check that out. See if that's going to provide any momentum. That's where it's been. This is on 5 minute. This is the yen on the left, dollar top right. Down at the bottom left, we've got the euro, and over on the right hand side, we've got the British pound. And that's what the dollar's been doing. That was this is 7 o'clock. It's where we started this morning. So as you can see, really not a great deal of trend direction, just whipsaw around. Okay. As always, VPA lessons, you can see the volume spikes coming in here. This is on 15 second, but it could be a minute, could be a daily, could be an hourly, could be anything. Volatility triggered, wick to the upper body. Do get follow through, volume falls away, then we get this candle here. Wick to the upper body, ton of volume under it. Is that weak? Yep. Then we got to follow through, repeat, hits the same level. Another candle of weakness, down we go, back to the volume point of control. Very strong platform. Yellow is the volume point of control. We've got another strong platform and another one here below. This one is even stronger. So there's 3 price levels here, which will attempt to act as a platform of support if the market is going to rally strongly. Volume's falling away. Market's trying to rally on falling volume, ain't going to go far. Testing that level again. Not huge selling coming in under that candle, but you know, enough. But that really tells its own story. Rising price, falling volume, not going far.
It's kind of creeping up, isn't it?
Yeah, as Anna said, it's creeping up. It's trying to creep up. I mean, you can see it on the daily. I think when we started, we had a sort of probably half that amount, and it's just trying to rally a little bit. Longer term, I would say we are pretty bullish. Intraday, you don't really care which way it goes, you just want to be on the right side.
Right, do you want to stop then? Just do a short one today.
Yeah.
And then we'll write about it later on and see what happens, yeah?
Yeah, it's quite frustrating actually, because what often happens with these sessions is we go through these, so how have we been going now? Not that long. Yeah, and then as soon as we close off, the market starts to move, which is always a little bit frustrating. But such is life. Doji candle on 2, which really just sums it all up at the moment. Resistance in here, lots of volume in here, trading around the volume point of control. Doji candle, not indicative of a reversal, just indicative of indecision and lack of direction.
What's in balance, isn't it?
It's in balance, yeah, it's in balance. It's in balance.
Oh God, you've got it everywhere, haven't you?
Yeah.
It's in balance. It doesn't go one way or another.
Yeah.
It doesn't know.
Just does not know what to do, and the volume is just confirming that. And we head over to the tick charts. That'll be saying pretty much the same thing. A little bit of activity you can see here came in. We had a little bit of a burst on the 1 minute, but then it sort of slumped back down again. Not much going on here. Red and orange down here, so lots of red all over the place. And it really is just a traffic light, so you can see it. It actually, you know, it highlights it here for you. Slow, slow, slow. So it is pretty sluggish at the moment.
There's no more news, by the way.
There's no more news to drive this market. And the only thing that will drive it now is if Dear Donald comes out with something. You know, it's, what is it? Final GDP, which is not the biggest, but you know, at least it's a decent number.
And then it's the aim for the G20.
And then we're into the G20, which is yeah. Yeah, I'll pass back to Anna at that point. I'll just go back to just have a quick look at oil, see if that's still within that range. Where are we? There we go. Yes, there we are. It's just trading around in there. Come off. So patience, and when you get the volatility triggered and you've got a decent position in the market, close out. Take your profit, or at least if you're running multiples, then you know, scale out, leave some on the table, but take the bulk of it off the table and just sit and be patient and wait. And once that's finished, it's trading within the range, and it moves away through 60 or wherever your particular level may be, then you know, jump back in again and off you go. Simple as that. Really, really simple as that. Okay, I'm going to pass back to Anna at that point. I'll keep an eye on what's going on.
Yeah, sure. David's got his eyes on the chart. Sometimes when we move away from the charts, something can happen. just a couple of things to bear in mind. Obviously, it's end of the month. It's obviously June, so end of quarter, half year. So lots of reports have to be written by fund managers and reasons why things have gone well, things haven't gone well. But the really, what's really interesting is this literally just dropped into my inbox, and that is something about the rally in the stock market. Now you have to remember the headlines you read about the stock market, they are really aimed at investors. People are going to be looking for something to move into for the long term, for value, as it were. Now, as a trader, I'm not saying that we are not aware of value. We are, but only to the extent that we think that something is going to be sold or something is going to be. We don't really care about longer term investing if you are going to be day trading, because all you want to do is you want to capture a move that that is going to get you some money. So we see a lot of these headlines, about why this rally is unsustainable, why it should be reversing, why is this and why is that. Well, that's awfully interesting, and it's just part of being a trader. Sometimes you have to have what's called cognitive dissonance. You have to hold two opposing opinions in your head at the same time. But at the same time, this is very interesting because it's from JP Morgan and it's one of their analysts, and he's done an analysis of what is actually leading, what are the stocks that are actually pulling up the S&P and to some extent the Dow. And the S&P, they've been pulled up not by growth stock, not by stocks in tech and consumer discretionary stocks. Those are the kind of stocks that rise when the economy is booming, when the stock market is really on a tear. It's actually going up from because the defensive stocks are doing well. Now that is pointing that at some point there is likely to be a major reversal. Does that mean that you are never going to go long in this rally? No, because as a trader, you just trade what you see on the chart. But it's just very interesting because it's highlighting that possibly somewhere along the line there is going to be, a major shock. It's certainly not going to be today. It's not going to be tomorrow. I know we've got the G20 at the weekend, and Lord knows what what's going to come out of that, whether China and the US can agree, can come to an agreement. What I also want to say is quite interesting, what I said about words and what's written in headlines. He says we were about 90% of the way on China, but there is still a path to complete this. So the markets have been hit by, as I said, we have the techs, we have the fundamentals, we have what's going on in the related markets. Those of you who are on the program, on the Forex program, will know how all these capital markets are interrelate and how they and how they can affect what's going on in one in another. But it's what's moving the market on a kind of minute by minute basis, and it's headlines, and it's unexpected headlines, and it's a misinterpretation of headlines. Does that mean we can't trade, we can't day trade successfully? No, it's just you have to be aware of it. And I would say that given the kind of trading environment that we're in at the moment, I think probably one of the most powerful indicators that you can have is the volatility indicator, David, yeah? Because volatility, when you have a misinterpretation, the price will then move suddenly. The volatility, the price moves out of the average true range. You will get the volatility triggered, and you will know, if you understand how volatility works, what is likely to happen next. And you also keep an eye on what is happening on the volume price action relationship. Is there anything else you want to say on that, Dave? No. And just a final note on the volume point of control, which is something I'm going to change these sessions in a little bit, maybe not next week, but certainly in the coming weeks, and really to explain a little bit more about the volume point of control from the perspective of market profile. We developed this indicator because we wanted to highlight on the chart that zone on the chart when the price action is in balance. David and I use the word fulcrum, but it's in balance in the sense that it's really not going in any strong direction in any one way or the other. It's one of the most, it's a phase of price action that occurs more than trends, and you will see it in all time frames. But you can use the VPOC. We've been looking at this, and we're always looking at different ways of using our indicators. And one of the ways we're going to look at using this indicator in multiple timeframes to actually help us, if you like, pick up trends in other timeframes. It may be in congestion, it may be in balance, if you like, on one time frame, but in another time frame there could be a trend, because as we say, you know, there are trends within trends within trends. This market is fractal. The charts are self-similar. The only thing that varies is the time frame of the chart itself. Anything else you want to add to that, David? Anything to see on your side, or are we pretty much where we were? I think we are very much where we said that. So I think we will stop there. We are back on Thursday next week, and rather than Wednesday, I think it's Thursday today, but it's actually Wednesday because we have a meeting tomorrow up in London, and we obviously couldn't fit in the webinars, but we are back on Thursday. Fine. Okay, right, Michael, if you want to email us, as I said, it was my fault. I should have actually put the email up earlier on. There they are. You can either email me, anna@annacooling.com. Help desk is Jonathan at quantumtrading.com, the guys that do all the support, or you can email David directly, david@quantumtrading.com. And the last thing I meant to say is we are working on the TradeStation version of these indicators, and it's something we are very excited about, and we hope to be able to start showcasing them. Well, not for a few weeks, David, a few months yet, because there's an awful lot of work to be done on. Well, maybe I'll do some sneak peeks on them. Anyway, thank you so much for taking time out of your day to come and join us today. I hope, as I said, despite that may or may not have been happening on the charts, I hope you've enjoyed what we've said, what we've covered. Perhaps you've learned something that you didn't know before, and we actually look forward to seeing you joining us next week. But as I said, on Thursday. So enjoy the rest of the trading day. Enjoy the rest of the trading week. Beware of what's going on out there in the markets, and stay safe, as they say. Take care. Bye.